Peter Lynch, he would always say in his books, go out and look in the market and see what people are buying and then see what companies make that and then go look at their financials and see if that's worth investing in. He did it with like, I think, when the Walkman first came out, there were Walkman everywhere. And then those little stockings and eggs, legs or whatever they called them. Those are the kind of things that he said. So last year, during the pandemic, when things were all shut down, my friends were like, well, what are we going to do this summer? And so one of my friends lives in South Dakota. And he says, well, you guys should come up here to the Black Hills and we'll do side-by-sides, up in the Black Hills. And I said, well, what the heck is a side-by-side? It's a little Jeep, and you can take them up on trails and, you're outdoors. And he says, you can rent them up here. He says, I have my own. So three of my friends down here, we started looking and we ended up looking and we each bought one instead of renting one because they were kind of cool. So the one that I ended up with that you can see right there is a 2014 Razor 800. Okay. So this one, although it was used, came with all the accessories, which you would normally pay for differently, which are doors, pilot seats with reinforced seat belts. You can see the roof. That's an added that came with it. Radio right here. You can see the Bluetooth right in here. Mirrors, and then a back bar here. Has a front winch on it. So we ended up buying these and we went to the Black Hills. We put them on trailers. We drove up to the Black Hills. Okay. And we got up to the Black Hills and there were thousands of these things up there driving around. Okay. And you can drive on the streets, you can drive on the highways. This thing goes about 65 miles an hour right here if you want. So I was surprised that when I got up there, the generations, there were people my age with these, and there were people you guys' age with these. So it really crossed generations. And so that was really the first time I started thinking, well, who makes Polaris? I never really thought about Polaris before. And so I started looking into what Polaris was, and they make way more than just these, which are everywhere. I went to the local Polaris dealer yesterday just to see if I could see what the new ones look like, and they were out. Okay. They were just totally sold out. Brand new, this model starts at $21,000. Okay. So they're sold out of these, and then you start adding on all the options. Just think what that costs. It's pretty cool. So there are things out there you might want to look around your place and say, why did I buy this? And why is this so cool? And see if other people are in it. And then look into the company and say, well, maybe that's something I want to invest in, even because I even bought the product. So that's kind of the way I looked at Polaris. I'm looking at Polaris Corporation. I personally own a razor. We picked it up last year during the pandemic and took it all over and had just a blast on it. So I started looking into the company a little bit just to see what Polaris was. And to my surprise, they make more than these little side-by-sides that you see in the middle there. They make boats, they make ATVs, they make military vehicles, they make commercial vehicles, they make electric vehicles. They make the slingshot that you can see sometimes down on the road. You can see it down on the bottom right, snowmobiles, and they also own the Indian Motorcycle Company. They were founded in 1954. They're headquartered in Medina, Minnesota. They're really a sports vehicle manufacturer. They have over 15,000 employees, 13 U.S. manufacturing facilities, 6 international manufacturing facilities, 12 distribution centers, 13 international subsidiaries. They serve over 100 companies, and the company has about 30 brands. Revenue for fiscal year 2020 was about $7.02 billion with a gross profit of $1.7 billion and an EPS of almost $2 per share. For the last 5 years, Polaris has grown revenue by a CAGR of more than 9%. International sales represent less than 15% of revenue. So there's an opportunity in international sales. When you look at estimates going forward from Seeking Alpha, for 2021, they're looking at $8.46 billion with a PE of 15, earnings per share of 9.27. 2022, 8.7 billion, and 2023, 9 billion. So you can see that the sales are going up. And over the last 5 years, sales have gone up each and every year. So it's a growing company by revenue. You look at earnings revisions from analysts from Seeking Alpha, you have 17 upward earnings revisions and no down earnings revisions. The average price target going forward is $159.79. As of Friday, last Friday, price was $131.07. So it has some uptick to it, according to the analyst. Shares outstanding are $61.24 million. Currently, they have a share buyback program approved. So they're buying back, $1 billion of shares here and there each year, which is good for a shareholder. Institutions own 78%. In May, they had a 2.5% price hike due to the inflation, and they're looking at doing another price hike. Average wait for customers now has gone from 4 to 8 weeks to 6 to 10 weeks because there's so much demand and there's a shortage of supplies. Before December of 2021, Polaris is going to introduce an all-electric razor. So the model you just saw, like the one I have, there will be an electric version. And by 2025, the company has committed to having electric versions of all their product types, and they have 30 different brands. So they're going to try to electrify all of their, at least have a product in each category that is an electric vehicle. So that's looking forward for them. The interesting thing is during the pandemic, new customers grew at 70%. So they had a bunch of new customers. People are looking for things to do, either boating or camping or, going out into the outdoors. Existing customers came back by 40%. And then they found out that repurchase rates have risen during the pandemic. So someone like myself might have went out and bought a Polaris, liked it, and now they're going and they're upgrading, or they're upgrading options on their Polaris or on their boat or on whatever they particularly bought. The only issue that I saw right now is really a supply chain issue, but they have a really good plan going forward to increase the number of suppliers that they have and get that supply chain up. But that's not unusual. You see a lot of companies in the automotive business having supply chain issues today. When we look at second quarter earnings, which just came out July 27th, second quarter sales increased 40% to $2.1 million, second quarter sales record. Second quarter net income was $2.52 per share. Gross profit margin for the second quarter was 26%. North American retail sales decreased 28% for the quarter, but that was driven by low product availability and supply issues. Polaris repurchased 800,000 shares during the quarter for $111 million. They announced a 63% dividend for the quarter. They increased the full year 2021 earnings guidance to $9.35 to $9.60 a share. And for the full year 2021 adjusted sales guidance was narrowed and is now expected to be up 19 to 21% over the prior year. So things are looking pretty good for Polaris at this point. And then I look, if we're going to go back into more shutdowns or due to the Delta version of COVID, I just see that there'll be people looking for more of these things to do outside and away from crowds. So you can see over the last 3 years, sales have gone up each and every year, and it's gone back several years. The sales have gone up. You have gross profit has increased each and every year. The one thing in 2020, you can see, I have an arrow to it, that they took off a write-off for goodwill. They bought a company called Trans-American Auto Parts, and it had some goodwill in there, and you have 10 years to write it off. So they wrote that off. So you can see the $379.2 million. And that's what affected when you go down to the net income to Polaris, $124 million compared to 324 in 2019. So that doesn't really bother me a lot. So let's go to the second quarter earnings. And you can see, again, in 2020, that $379.2 million in goodwill and other intangible assets in 2020, both in June, in the 3 months and the 6 months. And we don't have that now in 2021. So you go down and you have, basically, we went back into the positive once we got that goodwill written off. It makes it look a lot better. And goodwill is really a non-cash issue. So let's go on to the consolidated balance sheet. So you can see on the balance sheet, cash and cash equivalents have gone down. They paid off some debt, which is good. Current assets, $2.1 billion, which is ahead of current liabilities at $1.8 billion, which is always good. Means they can pay off their short-term debts. And so really a good, solid balance sheet. We look at cash flow. Net cash provided by operating activities is $195.6 million in 2021 for the first 6 months. That's where you really want to see cash flow. That just tells you that the operations is providing enough money to not only run the operations, but have money left over. When we go down to investing activities, you can see they purchased some property and equipment for $114 million. So that's good. They're reinvesting in the company. Financing activities, you can see repayments of debt. They repaid debt of $619 million. And then they came back with another debt at a lower interest rate for $499 million. And that's at a lower interest rate. I believe that goes through 2025 or 2026. So that's not a bad thing. You can see they repurchased shares, and then they also did dividends to shareholders. So they're not only giving back to the shareholders, they're rebuying their shares, and they're reducing their debt obligations. And at the end, you can see $310 million of cash and cash equivalents. I like the company. I own the company. They had earnings release last week. I think the shares went down 8 or 9% due to the supply issues. I bought on that dip. Now it's back up. Price is $131. The 52-week range is $86 to about $148. You want to get in. It's price of 131.07 is sitting right below the 50-week SMA. So the SMA 50-week is 131.41. The 200-week SMA is $119, and the RSI is at 47. So it's right about in the middle. So it may be a good time to buy, do your own due diligence and what price range you want to get in. If you are interested in Polaris, make sure you go in and take a look at the company and understand what it is and what it's doing. Over the last 52 weeks, the price has performed positively, up 26%. So that compares to about the S&P. I think the S&P is about 38%. So it's a little below, but you're going to have that in some single stock risk.